Do you still keep your hard-earned cash tucked away in a traditional bank account where it's earning meager interest rates and facing the erosive effects of inflation? In today's fast-changing financial world, the good old saying "cash is king" isn't as shiny as it used to be. The FDIC tells us that the national average interest rate on savings accounts is a mere 0.45%. Now, can that 0.45% help you beat the big bad wolf of inflation? Let's break it down. According to the Bureau of Labor Statistics, the annual inflation rate in the United States hit 8.2% in September 2023. That means on average, prices for stuff went up by a whopping 8.2% in the past year. So if you're trying to protect your money from getting nibbled away by inflation, 0.45% isn't your hero. However, if you're putting up your money in different things like stocks or bonds, you've got a much better shot at not just keeping inflation at bay, but also making some more dough. In this video, we're gonna dive into 6 cool assets that have a track record of outperforming cash when it comes to both safety and making you some green. And if you want to know the most lucrative asset, be sure to stick around to the end of the video. Let's start with number 6, real estate. Real estate is a pretty popular pick when it comes to investments, and there are some pretty good reasons why. First off, it tends to grow in value over the long haul, even if it takes a few twists and turns in the market. This means you could potentially see some big bucks in capital gains. And if you decide to rent out your property, you can count on a steady income that usually beats what a regular old bank account offers. This can be a real plus, especially when you're kicking back in retirement. Real estate also acts as a shield against inflation. As the cost of everything else goes up, the value of your real estate and the rent you're getting from it tend to rise right along with it. Plus, there are some nice tax perks for real estate investors, like deductions on mortgage interest, property taxes, and costs for managing rental properties. Here's another cool thing about real estate. You can use other people's money, like a mortgage, to snag a fancier property than you could pay for upfront. As that property gets more value, your potential gains go up based on the total value, not just what you initially put in. The best part? You've got a lot of say in what happens with your real estate. You can make upgrades to jack up its worth, change things around to match your style or what the market's into, and you get to be the boss of the whole deal. Moving on to number 5, precious metals. You see, one of the main reasons money is valuable is because it lets us save for the future. But there's a little hiccup. Governments keep printing money to cover their debts, which can lead to our money becoming less valuable. To beat this, money-savvy folks suggest putting your money into stuff that's rare and can't be easily duplicated, like precious metals. Take gold for instance. Its price has gone up a lot over the years, showing it's a good way to stash your wealth. The reason why gold is a good hedge against inflation is because it is a scarce asset. There is a limited amount of gold in the world, and it cannot be easily created. As a result, the value of gold is not subject to the same inflationary pressures as fiat currencies. Fiat currencies are currencies that are not backed by any physical asset. The value of a fiat currency is determined by the faith and credit of the government that issues it. As a result, the value of fiat currencies can be eroded by inflation. Let's say you have $100 today. You can put it in a savings account where it will earn a small amount of interest. However, if inflation is 2%, then the purchasing power of your $100 will decline to $98 in 1 year. Instead of putting your money in a savings account, you could buy $100 worth of gold. If the price of gold remains stable, then you will still have $100 worth of gold in 1 year. However, if the price of gold increases by 2%, then you will have $102 worth of gold in 1 year. In this example, gold has acted as a hedge against inflation. By investing in gold, you have been able to preserve the purchasing power of your money. Now, before moving on to the next asset, which is one of my top choices, please make sure to smash that like button and share this video. Also, let us know which asset is your top choice for cash. With that, moving on to number 4, securities. One of the top choices is investing in stocks. When you buy stock in a company you trust, it can pay off big time down the road. How well your investment does depends on how the company performs and its role in the overall economy. For example, in 2010, Amazon was trading at around $100 per share. At the time, Amazon was a growing e-commerce company, but it was not yet the dominant force it is today. However, investors who believed in Amazon's long-term potential bought shares of the company. Over the next decade, Amazon's stock price skyrocketed. By 2020, Amazon's stock price was trading at over $3,000 per share. This means that investors who bought Amazon stock in 2010 saw their investment increase by over 30 times. However, it is important to remember that past performance is not indicative of future results. Always do your own research before investing in any stock. Up next is number 3, art. Not all art makes it big in the sales department. What often makes the difference is the backstory and how that story grabs people's attention. That's what really pumps up the value of art. Whether it's a painting, a mural, some craft work, or a slice of history or culture, diving into the art world isn't for the faint of heart. In 1990, Edvard Munch's painting The Scream sold for $119 million. The painting is considered to be one of the most iconic works of art in the world, and its high value is partly due to its backstory. The painting is said to be a representation of Munch's own anxiety and despair, and it has been interpreted as a symbol of the human condition. But here's the thing, just like buying land or real estate, you can team up with others and pool your resources to get in on the action. Keep in mind that art is a long-term investment, so make sure you fully grasp what you're getting into before you take the plunge. Moving on to number 2, the index fund. Index funds are a sound investment for various reasons. Firstly, their fees are typically lower than those of actively managed funds, as they do not require a fund manager to make investment decisions. Secondly, they are diversified investments, holding a large number of securities to reduce risk. For instance, historically, the S&P 500 has shown an average annual return of around 10%. However, it's essential to be aware of the associated risks, including potential short-term losses, and to consider your personal risk tolerance and investment goals before committing to S&P 500 investments. Now coming up to our most lucrative asset with number 1, cryptocurrencies. Cryptocurrencies have gained prominence in the era of fintech, offering a more attractive alternative to stashing cash under your mattress. The increasing adoption of blockchain technology, which is becoming more environmentally friendly, suggests that digital currencies could be a promising avenue for investing money, potentially offering good returns in the future. Take Bitcoin, the digital superstar. It's like the cool kid on the block when it comes to making your money work for you. Way more exciting than just stashing it in a regular old bank account. But of course, it's not all rainbows and sunshine. Here's why people find Bitcoin so interesting. First, Bitcoin has been around since 2009 and has shown some serious growth, reaching an all-time high in 2021 when its value exceeded over $65,000 in November 2021. Here's the reason why it's reaching these highs: the supply. There will only ever be 21 million Bitcoins, thanks to some clever computer stuff. This scarcity is a big part of what makes Bitcoin so appealing. People believe that as more and more people want it, the limited supply will make its price shoot up. And that wraps up. But before we go, which of these assets resonates with you the most? Is it the tangible security of real estate, the timeless elegance of art, or the potential of cryptocurrencies? Share your thoughts in the comments below, and don't forget to hit that like button and subscribe for more insightful videos. We'll catch you in the next one.